Look around you, different things born out of truth and passion. Business software, it's our craft, our identity. Thoughtfully engineered, passionately designed to help you transform your business. Zoho, made in India, made for the world.
Explaining and telling what could banks benefit out of the announcements which has been made by Reserve Bank of India. We also have with us Tanvee Gupta Jain as well as Nilesh. Welcome, gentlemen. Welcome, Tanvee. First, I want to come to you, Nilesh. As far as these announcements which has been made by Reserve Bank of India this time, do you think the pitch had a lot of runs, but Reserve Bank of India governor decided to wait and watch?
So market was divided in terms of rate cut versus deferment of rate cut and a slightly dovish language. I think, as Reserve Bank of India governor mentioned, they want to wait and watch how the transmission happens. About 60% transmission has happened on the newer loans, little more on the deposit side. But they will wait and watch as the growth numbers have come ahead of expectation. And inflation has come well below expectation. The most important part of this monetary policy announcement is giving flexibility to Indian banks on capital market exposure. Hitherto, our promoters going for acquisition had to depend upon alternate markets or overseas lenders. The RBI is relooking at the same. Even loan against shares limit has been raised upwards. So this is creating level playing field for Indian banking system to support India's investment and corporate acquisition and restructuring activity.
The day coming in from Nilesh Shah. Tanvee, hi, morning, and thanks for your time today. First up, your read-through on the policy and mixed cues coming in on GDP projections, because if you take a look at what the projections are, FY26 projection raised to 6.8 from 6.5, but quarter 4 projections have been cut versus earlier. How are you reading this mixed signal?
All right. So let me start with how are we looking at the policy. Clearly a dovish pause, because RBI governor clearly highlighted that there is space for more, but depending upon how the global headwinds are going to shape up and what it means from a macroeconomic outlook. So if I look at the GDP numbers and inflation forecast today by the RBI, the GDP numbers have been revised higher to 6.8. At UBS, our forecast is 6.7 in terms of real GDP growth. And clearly, even the RBI growth trajectory is indicating that the growth is going to slow down in the second half, more towards 6.2 and 6.3 in the last 2 quarters. And we have to take into account that there was a very low GDP deflator, which was also partially one of the reasons why your headline GDP in the first half is looking so high at more than 7%. We saw a 7.8% GDP growth in the June quarter. So adjusted for those statistical impact, I would say the growth numbers looks very, growth outlook looks to be benign, and growth is expected to slow down because of tariff uncertainty leading to downside risk on India's goods trade, and still a lot needs to be seen what happens on the services tariff side. So I think the numbers look largely aligned with our numbers. Going into inflation, clearly inflation is looking, or I would say we are in the deflationary zone, and even our inflation forecasts are even lower than where RBI is now for the full year numbers. RBI has lowered inflation from 3.1 to 2.6%. At UBS, we are still at 2.4. And where we see more downside surprise is largely in the March quarter inflation number, where we think that inflation could surprise even lower than what the RBI is. But a lot has to be seen over the coming months in terms of how the winter crop outlook is going to be, and how the crop situation, especially after the recent flood which we saw in various states, especially in Punjab and Haryana, is going to have an impact not only on the crop outlook, but also on near-term impact on the vegetable prices. So I think there are a lot of moving parts, but at this point, I would say it's a dovish pause, and we still have a baseline expectation of a 25 to 50 basis point rate cut still expected in the rest of FY26.
So more rate cuts expected going ahead. Nilesh sir, before I come to you, just a quick follow-up with Tanvee. Tanvee, you did say that tariff could be a factor that could weigh on our overall macros, but the governor also mentioned that this GST rate rejig could largely offset external factors. What do you think the balance over there could be, and to what extent do you think this GST rejig could mitigate our tariff pressures?
So if you look at the GST impact, it is almost to the tune of 0.6% of GDP. And I think for this year, the downside on US tariff on goods is largely taken care. But the thing is that most of the GST impact should play out in the next 2 quarters. That is December and the March quarter. And we still don't know how the FY27 outlook is going to shape up. I mean, at UBS, we still have a 6.3% real GDP growth forecast for Indian economy, but that is assuming that we do see some kind of negotiations between India and US, and the 25% penalty gets withdrawn sometime before December. But in a scenario where 50% tariff sustains, I think there is going to be a knockdown effect on employment, consumption, and investment. And I don't see GST will be more than enough to offset the downside going into FY27. So I think there are a lot of moving parts at this point in time. I mean, we are definitely not pricing in any scenario of a services coming under any kind of tariff situation. But the recent hike in H-1B visa and now this higher act which is being proposed in the legislative assembly in US are also some moving factors which we need to take into account how they shape up. So I think at this point there are more downside and upside, but a trade negotiation between US and India could be the and a common ground being reached between the two countries is definitely the best outcome we could have hoped to play out over the next 3 months.
All right, so many moving factors as highlighted by Tanvee. Nilesh, hi, I want to come to you, but before that, let me also introduce Ashima Goyal into the panel. Thanks for joining in. But for you, Nilesh, how should markets take the hint which has been given by Reserve Bank of India this time? Of course, there is no action, but at the same time, as far as growth projections are concerned, yes, there is a concern, and governors specifically maintaining that it is below aspiration. So how should market take it?
So undoubtedly, India has been performing well below potential for all these years. Growth below aspiration as well as potential is nothing new to Indian market. For market, for the time being, this is a reasonable policy. Growth estimate has been revised upwards, which was well recognized. Inflation estimate has been revised downwards, which is also as per expectation. Liquidity side, RBI will remain nimble as well as flexible. Undoubtedly, these are all means to stimulate domestic economy. For markets today, there are many other reasons or factors to focus upon, including geopolitics and the festival season demand, and finally, the quarterly results and the forecast for the future. So this policy is a non-event for the equity market. The debt market will again be divided. Some people will be disappointed that rate cuts haven't come. Some people will take shelter in the dovish language and the possibility of rate cuts in the days to come. So we'll have probably a kind of range-bound market in fixed income, and from an equity point of view, focusing upon other factors.
Right, Nilesh, point taken, and please stay with us. Let me also thank Tanvee Gupta Jain for joining in our panel.